Good afternoon. I'm Taylor Combaluzia, a mining analyst here at Red Cloud Securities. Our next presenter is Nolan Peterson, who's the CEO of World Copper Limited. World Copper is focused on its Escalones project in Chile, where it recently completed a PEA, as well as its PEA stage Sonia project in Arizona. I'll note it also owns the Cristal project in Chile. Nolan, you'll have about 15 minutes or so for the presentation and then Q&A session afterwards. So viewers, please submit your questions. Please take it away, Nolan.
Thank you, Taylor, and thank you everyone for attending. I know it's been a long 3 days. You've given a lot of attention to some great stories, and this, I think, is one of the last presentations you'll probably watch. So I do hope that you'll have a little bit left to give us, because it is quite an exciting story, and I'm happy to tell it to you. I did put up quite a large deck for upload, so if you do pull it down, don't worry, I'm not going to go through the whole deck. I'll just hit on the important notes. And then I really would like to hear any questions or feedback from anybody as well. So now let's just get started into it. World Copper is a Vancouver-based junior Canadian mining company with projects in Chile, the Escalones and Cristal project, as well as the Sonia project in Arizona. We just completed a merger with Cardell Resources in January that brought the Sonia project into our portfolio. Escalones and Cristal is where the company came from. The company is publicly traded for a little bit over a year. So we just listed in January of 2021. So this is a relatively fresh story in the marketplace. And yet we have had tremendous growth with our assets as we have established the value proposition for the company for potential shareholders and investors. I can't emphasize enough how early and great an opportunity it is for many investors to get in with this story, because I talk to a lot of brokers and dealers and institutional investors, and even with the news that we put out, the exciting news we put out recently, and the story we've been building for the last year, it is a fresh story, and they are, for the most part, completely unaware of it, although awareness is growing. I'll introduce myself very briefly. I'm the CEO and president. I joined in April of last year. I come from a very strong engineering background. I spent 5 years in engineering consulting, and then I worked for a company called New Gold, where I built a couple of mines, the New Afton Copper Gold Project in Kamloops, as well as the Rainy River Project in Ontario. I was involved in construction. I also have a strong financial background with an MBA and a CFA that gives me a broad experience on the technical, operating, as well as financial aspects of the mining industry, almost 20 years in the industry, creating value at every step along the way. So I'll skip over the copper demand. I'm sure you've heard a lot about that, or at least has grown to your attention in the last few weeks if you haven't. Let's get right into the assets. Escalones is our flagship asset in Chile. It is in the Santiago region of Chile. It's 35 kilometers east of El Teniente, which is the world's largest underground copper mine. So it's in an area where other mines already exist. It's in an area of good infrastructure. There's road access, power lines, there's gas pipeline crossing the property. Most of the power is hydroelectric in the region, which contributes to the renewable aspects of this property that we will be emphasizing as we develop it further. We also have good water access. We are answering the question on very early in the stage of development for this project. So I won't touch into the details of that, but rest assured that we are cognizant of water issues in Chile, and we are anticipating and adapting to that as we develop the asset. So as Taylor mentioned, I'm going to skip right to the most exciting results for this project. 2 weeks ago, just to emphasize how fresh this story is, we put out a preliminary economic assessment for our oxide resource at Escalones. Now, last August, we put out a resource that was the largest copper oxide resource in exploration and development in Chile at the moment. It was 426 million tons. So should go back here, grading at 0.37% copper for 3.5 billion pounds of copper in the ground. Again, this is the largest copper oxide deposit in exploration and development in Chile as of 5 months ago. And this was not a story that was growing to that. We took this project over, we did the work to reinterpret the resource, and that's what we delivered. Over the last 5 months, my team and I have been working on a preliminary economic assessment, which we delivered again 2 weeks ago, $1.5 billion US post-tax NPV at $3.60 per pound copper. I believe we're above $4.80 right now. A 46.2% internal rate of return with a 2.2-year payback. Now, these numbers are quite incredible. As you know, if anyone follows the resource space who deals with junior companies that often work on resource statements and maybe get to an economic study, these numbers are stack up very well against any type of economics you will put out there. What makes this possible compared to all the other large copper projects that you may be following? Those are sulfide flotation projects that cost on the order of $1 to $2 billion minimum to put into production. An oxide heap leach project can realistically be put into production for under $500 million and at a similar scale to some of those larger projects. This project, $438.4 million, is the estimate that our engineers came up with for the initial capital. The operating costs are average and in line with our peers at $1.19 per pound C1 cash cost. The advantage for this project is the size and scale compared to other oxide projects out there. So we do have a list of comparatives. I would encourage you to review them later by looking at the slide deck or pulling it off of our website. But I do want to get to a comparison that's very important for investors, which is the market capitalization of comparable companies, single asset, no production or revenue similar to us, versus NPVs of their studied at similar stages of development. So again, PEAs or FSs or PFSs. Look at some of these projects. Filo del Sol, $1.5 billion US valuation. Our initial capital of their project that they put out 3 years ago, 1.3 billion initial capital, 3 times larger than Escalones, and yet the NPV is only $300 million more, yet they enjoy a 20 times market cap valuation. Fair enough, they have significant upside built into their project share price. We also have upside potential at Escalones, which I'll discuss. Our other comparative is Marimaca, $285 million initial capital, so a little bit more than half of Escalones's, but we are twice the size of Marimaca. Our CapEx factors and benchmarks appropriately against them, and yet we have twice the resource size, twice the copper production roughly. They enjoy a 9 times ratio against the market cap as us and a 4 times market cap valuation. I think this is very important to understand that this project, as market awareness grows and this company's awareness in the market grows, these valuation metrics will start to close. They have to, and this is the runway we see ahead of us as we increase the value of this project. I'll skip over a number of comparatives that are good to highlight, but I don't have time to with the presentation time that we have. I want to focus on the upside exploration potential at the property. Within the next few days, we expect to receive drill permits for the Mancha Amarilla. The Mancha Amarilla is our near deposit extension. We believe it is an extension of the existing resource that was just never drilled off. Our plan is to drill from north to south along this ridge and prove, here's a picture of the Mancha Amarilla on the left there. We believe it's just one block that continues. That proves that the mineralogy continues from north to south, and then this deposit is potentially twice as large as it is right now. So potentially 700 to 800 million tons of copper oxide heap leachable material in Chile. This would make it by far the largest copper oxide project in development. I do want to go quickly to our other PEA studied 43101 backed project, which we acquired in Arizona. This is the Zonia project. It is a brownfield operation. You can see it's been pre-stripped already, leach pad from former production. This project sits on private patented land in Arizona, and the previous holders, Cardero, did a preliminary economic assessment, 200 million initial capital. Again, a solvent extraction, electrowinning, oxide heap leach project, 200 million initial capital, 200 million after tax at $3 copper, at $4 copper, 450 million after tax. You can just imagine what it would be at $5 very soon. This project, owing to the fact that it sits on private patented land, can potentially be fast-tracked into operation in 3 to 4 years. However, we also have the potential to add 50% to this resource. It's already 100 million tons, to add 50 million more tons to the resource, because when they did that preliminary economic assessment, they constrained the resource to what would fit on private patented land. We will be doing a strategic reassessment of the PEA, including that resource without spending a single dollar on exploration. I will make this resource 50% larger, and we'll compare the economics and determine the best path forward for the project. We also have 300 to 500 million tons of available material as a potential target to the northeast, which we will be doing a drill program on very soon this year as well. So strong upside potential at Zonia, as well as strong economics. Putting it all together, we have Escalones and Zonia. Both will have soon, as Escalones' PEA 43-101 will be filed very soon. Both will have 43-101 backed preliminary economic assessments confirming over $2.3 billion of potential after-tax valuation at $4 copper, over 4 billion pounds of oxide heap leachable material in resource and in economic studied. And we are trading at a sub $63 million US market cap. Again, this is a tremendous opportunity to get in on a story that the wider market is not very well aware of at the moment. I'll leave it for there. Oh, one other thing is we have the Cristal property. This, if you really like high potential exploration targets, this is our so-called wild card, but really the value of the company right now should be coming from Escalones and Zonia. I'm happy to take any questions.
Perfect. Thank you very much for that great presentation, Nolan. So just a reminder to everybody on the line that you can submit your questions at any point using the Q&A button. We've had some come in already. First one here, how does the BHP investment in Filo mining affect the copper mining landscape in Chile?
Yeah, so that is a really good question. I used to get a lot of questions, actually I still do, about the situation for investment in Chile. Is it the right place to be investing in copper mining? When the largest mining company in the world drops $100 million into a junior mining company, and by junior, I mean no production, not that they don't have a fantastic valuation in the market, $100 million, no questions asked. And then on the same day, Scotiabank also invests $1.3 billion in the Chilean business community. That's a strong vote of confidence that basically is the best answer I can give to anyone that investment is back on in Chile, and the market and business community are very supportive of the new government and the changes that they'll be bringing about.
Perfect. Okay. Another question here, just wondering on the operating cost side, how you're able to achieve those very compelling operating costs when you compare it to other projects out there.
Yeah, so we do have comparisons. You can see here, there's nothing special about our operating costs. This is our mining cost per ton mined. We're actually very high compared to the Marimacas, the Filos of the world, despite the fact that we're at lower elevation than many of them. Our engineers were actually very conservative. You can see the SXEW processing costs were in line with our peers. Important thing to note is that Escalones has twice the processing capacity of the Marimacas and Antillas of the world. We're also a copper porphyry system, which means our metallurgy is less complicated than an IOCG iron ore copper gold deposit that Marimaca would have, for example. So, with economies of scale, a simpler metallurgy, we forecast and our estimates, our operating costs are actually not that far out of line. They're actually quite in line. I do have another benchmark I'll show you right here. It's very important to me as an engineer. I'm not putting out numbers here, pumping up a junior stocks numbers with numbers that anybody in the world can poke holes into. We're average compared to peers. We're average compared to comparable projects, despite having economies of scale, owing to the fact that our mining costs are higher than theirs. I'm completely satisfied with it. The important thing is that the value of this project does not come from input assumptions on the operating and capital costs. Those are in line. It simply comes from the size of the project with those capital advantages of an oxide project. So as a comparison, Marimaca is a fantastic asset, 12-year mine life, 25,000 ton per day processing. Escalones is a 20-year mine life project with a 50,000 ton per year processing. So we're twice the processing rate of Marimaca, but then we have 8 extra years. That's what gives this project that extra heft and meat on the bone compared to a Marimaca-sized project. It puts us in league with these larger sulfide projects, but with the capex of an SXEW. That is the advantage of the project. And I also want to touch on the comparables on the capex side. We are in the capital intensity, which is dollar cost per ton of production, in line with other peers that are SXEW projects. We just happen to be half of the average, which is primarily comprised of flotation projects. I would encourage people to look at the comparatives that we have put up in this chart table later.
Perfect. Another question here. So do you believe it's just lack of market awareness is why you're so undervalued compared to Marimaca or Filo?
I completely believe that that's what it is. No analyst covers this story yet. We've never done a brokered financing. We've been publicly traded because we've never needed to. We don't have a strategic investor or a capital fund that is pushing our story behind or in front of them. Largely, that's what it is. 1 year publicly traded, never needed to do these types of deals before. We've done this work without that need. And the market awareness is growing, and I honestly think that's what it is. And with that being said, since our last financing or non-brokered private placement in October of last year, we've gone from 40 cents to up over $1 at one point and back down to 80 cents, largely due to some warrant pressure. It is a perfect opportunity for people to get in. We have been actually quite strong in the space, despite the fact that we are very small still with compared to the assets that we do have.
Great. Okay. We have a question here. Maybe best way to talk about it is just the kind of timeline moving forward with Escalones, ultimately getting to production, I guess, maybe if they outline that for.
Sure. So we do, we have impressive economics here for the PEA. We also have ideas to expand the resource. We really want to understand, first of all, in addition to what we already have, how can we make this resource bigger and better while still maintaining its cost profile and attractiveness for investments? That will increase its attractiveness not only to ourselves to potentially put into a production for a low capex scenario, or a medium-sized producer that may be interested in maybe upsizing it, or if we can make it even larger, a major steps in and would be really interested in it. So as an example, I want to go back to our resource statement here. I was speaking with Glencore yesterday. They have the Lomas Bayas project in Chile. It's a copper oxide project. Their resource is in production under 400 million tons and grading at 0.27%. And that's one of the largest mining companies in the world. So if we can make this project even bigger and make the throughput higher and accelerate the production through higher grades or through a larger deposit and giving it a longer mine life, it starts to attract that attention. So that's what we'll be doing in the near term, a drill program here. We'll also be doing a drill program in one of the northeastern targets in the next summer. Remember, they're half a year out of sync with us. And then 2 years from now, we would revisit, assuming we don't hit a much higher grade deposit up here, we would return back here, start on the PFS path and the FS path. What's also something we have to account for is permitting. While we're doing all of this drilling, we will be amassing permitting data that will allow us to accelerate permitting when this project is ready to be pushed across the finish line into construction.
Perfect. Okay, and then with Zonia, I know you mentioned expect an updated study very soon. Is the goal there still to fast track that, or is the strategy changed with that asset since you?
Yeah, so we want to see what the potential is to make this a bigger deposit as well. It kind of occupies a space right now where a junior like ourselves could theoretically put it into production, but otherwise it's a little bit too small for a medium-sized producer to be interested in, or potentially JV with us for it. So we will be looking at a strategic scenario where we make it larger by adding that resource that was excluded. And then we'll be weighing it against the fast track option and seeing which one the market responds to better, which one we get more support from institutional investors and development companies that maybe want to partner with us. So really we're creating optionality. And while we're doing that, we're going to see what we also have to the northeast here. It could change the gravity of the project. So yeah, really right now, Taylor, we're keeping the options open and determining what the best path forward is.
Perfect. And with that, we are right on time now. So thank you, Nolan, for presenting World Copper this afternoon. And thank you, everybody, for joining us.
Thank you, everybody, as well. Cheers.